Hello everyone and welcome to another episode from Price Action series. In today's video, we are going to learn about one of the most powerful concepts in trading, supply and demand. Once you understand this clearly, you can read the market with more confidence and accuracy. In trading, we analyze past price action to identify areas where large institutions bought or sold aggressively. What is supply and demand? Supply is where sellers are more active than buyers. This puts pressure on the price to go down. If price drops sharply from a certain level, that becomes a supply zone. These zones are often created by big institutions who places large orders. Demand is where buyers are more active than sellers. This pushes the price upwards. The interaction between supply and demand is what causes price movements. How to identify demand zones on a chart? If price moves strongly upward from a certain level, that level is called a demand zone. These zones are often created by big institutions who place the large orders. The reason this happens is big players like institutions can't place their orders all at once. That's why they leave some orders unfilled. When the price comes back to the zone, their orders get triggered again. Then we get an entry. What are big institutions? Why they matter in trading? Big institutions are like mutual funds, banks like ICICI Bank, JP Morgan, and insurance companies, hedge funds. Hedge funds they use aggressively shorting their positions. FIS, foreign based investments, who invest in Indian stocks and bonds, so they can move markets with their large volumes. Why they matter in trading? They have huge capital and can move prices significantly. They often place bulk orders which create supply and demand zones. Understanding where they buy or sell helps retail traders align with smart money. Understanding the supply zone. Look for a base of small candles followed by a strong bearish candle. That's where sellers took control. Mark the zone from the highest wick of the base candle to the lowest body. How do these zones work? When price returns to the supply zone, it often faces resistance and moves down because unfilled sell orders get triggered or active. So sellers are active there. But always wait for confirmation with price action before taking a trade. Understanding the demand zone. Similarly, find a base of small candles followed by a strong bullish candle. The base is where buyers entered in the market. Mark the zone from the lowest wick of base candle to the highest body. How do these zones work? When price comes back to a demand zone, it often takes support and moves up because buyers are there. Buyers are active there. Unfilled buy orders are still active. Price leaves quickly. When price leaves a zone with momentum, it's a sign of imbalance. More buyers or sellers are there. These are not random levels, they are institutional reaction zones. So, I hope this video gave you a clear understanding of supply and demand zones. If you found this useful, don't forget to like and share, subscribe for more such content. Thank you so much.